Hello and welcome to Doing Business in Rwanda. I'm your host, David Keziem-Soki. Rwanda last month launched a 3-year Treasury bond worth $18.3 million, targeting local and regional investors. The bond aims at boosting the nascent capital market, which still remains stilted compared to others in the region. In this episode, we look at how the capital market has developed since its inception to the Rwandan economy and what it has in stock for 2014. Government has embarked on reviving the capital market by kicking off a campaign to market its $18.3 million Treasury bond. This bond is meant to raise funds to support the development of infrastructure programs, and for the first time it will list on the Rwanda Stock Exchange. Government officials believe that this will create a buzz on the bond market, which has been inactive for a while.
We've been selling government securities for a long time now, since 1998. You remember when we started, for those of you who are in the media, we're selling treasury bills using the auction system that we had at the time. But then the treasury bills are usually up to 1 year. But then we wanted to increase the financial instruments, the public instruments that can allow all of you to invest. Initially, we were working directly with the banks, and institutional investors were not involved. In most cases, individuals were completely absent. But this time we want to make sure that all the opportunities that we have, the public should be part of the investment group that we are talking about.
We are working with the capital markets on government securities to issue the bond. But we also work with the capital markets because we manage the central securities depository here, the system that is used to transfer or to manage trading of shares. So we are like an agent of the Capital Markets Authority in terms of the management of trading, transfer of shares and value from different dealers on the market.
It's going to create that appetite and opportunity for corporates who would want to raise funds, who would want to raise debt. So it means that if you're seeing the government issuing some debt, and you see at what is the interest that they are offering, you're seeing what's the demand, and you're trying to understand that, as a corporate, it should create some sort of awareness and an idea for you to be interested in why not issuing a corporate bond. We only have one corporate bond, and it's true that for many years now, the government has not been issuing bonds, but I think that it's not only going to be good for us to trade into those bonds, but I'm sure that it's going to create an appetite for the corporates, and I think that's very interesting for brokers.
The Rwanda Stock Exchange was founded in January 2011, and it is operated under the jurisdiction of the Capital Markets Authority. While the market's doors opened for trading just 3 years ago, the market is growing along with the country's economy.
The concept of the capital markets started with the era of privatization following in the 80s, following the success of privatization story in the UK mainly. And it was found necessary that for African countries to reform and restructure their economies. And in the process, of course, also of liberalizing their markets, it was necessary to have capital markets in place. So at one time, capital markets appeared, especially in emerging economies, and specifically Africa. Capital markets started emerging as a symbol of economic success without necessarily addressing the fundamental need of these markets. However, I think some time also starting late helps. So when this need arose, the government of Rwanda focused on establishing a market which could access the economy to long-term capital.
Our financial sector, basically in general, has needed the complete deepening of the financial sector. So the lacking factor was the long-term funding for our economy, which you could not find in the traditional banking system if you want to fund long-term projects, and there is still a gap, or rather a mismatch between short-term available money and long-term projects that need investments. So when you don't have a capital market industry, that doesn't work. So the stock market could not have come at the right time, because Rwanda has passed that time of emergency to development. So when you need to develop, you need to match it with the funding necessary.
The stock exchange started with one cross-listing. There was a second cross-listing. Then there was a first local listing, a second local listing, and then a third cross-listing. So it means that it can only get better. And you look at the number of trades that have been happening. If you count the number of deals, I'm sure that 2009 and 2010, there weren't more than 50 deals. But now we have more than 1,500, and it has been constant over 2011 up to last year with the local listings. So it's a good market. It's a market which is growing.
In February 2011, the National Bank of Rwanda contracted a Kenyan firm, CDSC, to train Rwandan staff to operate their own securities registry.
In 2008, late and early 2009, a transitional organization was established by the government, which was referred to the Capital Market Advisory Council. And this was actually a body that was established and mandated to advise the government and put in place two things. One, advise on the legal framework, basically draft the legal framework, and secondly, also set up some rudimentary structures that would allow both the private and the public sector of Rwanda to quickly access capital when they need it, and specifically long-term capital.
Today, the stock market has a Rwandan CEO and operates its own share index. It has also developed an independent performance benchmark for its equities.
Since the first IPO of Bralirwa was put in the market in 2011, we've seen more and more shareholders. At that point in time, we had 5,000 retail customers buying the Bralirwa shares. For Bank of Kigali, we again saw a larger number. We had more than 7,000 retail customers, and since then a great number of customers have been coming in, registering with the BK Securities and buying more shares. Although not to the same extent as the international shareholders, we have seen more and more Rwandans opting to save and invest through the stock exchange.
Though critics say that the Rwanda stock market's establishment was premature, the actual players don't think so.
The only way to assure investors you have to attract them into your country, especially FDIs, they need that assurance on governance. They need that assurance on corporate governance, mainly accountability, and the financial reporting, which are brought in by a capital market industry.
Bank of Kigali is the second domestic listed company in the Rwanda Stock Exchange. And since the listing, we've seen our brand equity going up. We've seen more and more customers opting to even take services from Bank of Kigali.
We here as CMA, we look at markets in terms of how can we make our markets more competitive going forward. We would like every East African business to think of coming to Rwanda to raise their capital from here. We think in terms of every investor out there who thinks East Africa to come and invest in East Africa through Rwanda. We think in terms of every investor who wants to feel safe with their investments to do it within East Africa through Rwanda.
A recent study by the National Bank of Rwanda revealed that the appetite for investments on the stock market has increased following the success of Rwanda's $400 million international Eurobond issued last year.
Some countries issue bonds for balance of payment purposes or just for benchmarking their countries to allow their private companies to go to the market. But for us, when we go to the market, when we have specific projects or programs we want to finance. So that would depend on how quickly and how conducive the country will assess the market.
To attract more activity, the stock market and its custodians have laid down an interesting strategic plan for 2014 and the next 2 years. Brokers, issuers, and the National Bank of Rwanda have all put in place a strategy to help the stock market achieve its objective and become competitive regionally.
We have good counters. Being Bank of Kigali, being Bralirwa, we have good counters. So it means that anybody who has invested, being at the IPO level or later on, is happy because the share price has appreciated. And I think that is what most investors are looking at, as smaller as bigger.
We are waiting for that process of having a common East African clearing system whereby if you buy the shares in Kigali, it can be reflected in other markets that you have bought the shares. So until then, cross-listing may not be really adding much value. We expect that within the course of this year, we will be able to have the stock exchange clearing systems being able to work together through the integration.
Capital market, as part of the overall financial services, can also become a mainstay business itself so that it offers services. So if we are more efficient in offering the service, capital being raised by people or investors who are outside Rwanda, and also capital raised for investments even outside Rwanda can be raised through Rwanda. And that way we feel that if we, as we believe we have this opportunity to lead from behind, as you're mentioning, you're talking about the size, but we don't look at it that way. We are looking at it in terms of pure economics. We are late starters. We have the advantage of being stealthy, if I may say. We are able to make decisions quickly, and our decisions are made notwithstanding what has happened in the past. And without much history on capital markets, we have the advantage of picking the best today.
That's it for this edition of Doing Business in Rwanda. Join us in 2 weeks' time as we unpack more on Rwanda's growing financial service sector. We love to hear from you, so do share your views with us. Our Twitter handle is @DBIR360, or simply log on to www.cnbcafrica.com. I'm David Keziomsoke.